Wall Street. Do it right, build wealth, live life, economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. Here's your host. The new Black.
There we go. Did that work? There we go. How about now? I just changed my mic. Let's see if that worked. Yeah, that's right. That should be fine. What's going on, Vivian? All right, so it looks like I can be. Can I be? If you give me a thumb, you can hear me. All right, fantastic. Thanks so much, brother Mari. So anyway, you got to change the settings sometimes. Settings change up on you sometimes. So anyway, tonight we are doing Welcome to Wall Street Wednesday, and I'm going to be looking into taking a look at the stock market for you guys, having a discussion with you guys, and also getting some ideas from you. I believe that two heads are better than one, and so a lot of times, what happens is, you and I can look at things in a particular way, but then when you have a discussion about it, you start to look at it differently. And I also believe that you should invest in that which you know. I think many people make mistakes because they follow in their crowd or they're following people that they think know, versus kind of looking into it, researching it themselves, and then using their own judgment, your own judgment about about what you believe will be best for your money. Now, I will say this: investing. Someone asked me what is the stock. Asked me a little bit about what the stock market is, and essentially, the best way I could break it down is essentially. The stock market is a place where there are valuations of companies that provide products and services that we use in our community. And so as the value of those companies go up, then the desire to own parts of that company typically goes up as well. And as the demand for ownership increases, then the value increases. In other words, people begin to put more money in the company that they value. And then if the value of those companies go up, and then obviously the stock price will follow that. And then there you have it. Now, it's not just individuals that invest in the stock market. I mean, most of the things that move the market is big money. That's going to be hedge funds, a lot of places where you have your retirement funds. All of these are like groups, sums of money that's together that's going into particular directions. And then other things that kind of move the market as well would just be basically hype or feeling. So when there's a lot of excitement about a particular industry, or if there's a lot of remorse about a particular industry, it can move it up or down as well. So that would be called what we consider to be volatility. That's going to be how people feel, how the market feels about an industry, a company, or things that's taking place, as it relates to society. So today I wanted to kind of look at, COVID-19. We got a nice little chart that we can take a look at, and then you kind of have a stock market discussion, talk about money, and I've actually done pretty well in 2020. I set a target. I wanted to get to $10,000 in my account. I started in March, and I'm almost double that. So I don't think I'll get to 20,000. It's only 14 days left, but you don't know. You just never know what happens. So so that's pretty cool as well. That's right, Rhonda. Politics can move it as well. And so I'm gonna share with you guys a couple of questions that kind of hit my path today and the past couple of days. One person hit me up, was like, "Hey, they want to learn more about the stock market and investing." And I basically told them, "Well, you got to make time to learn. Like, you can't, you don't just hop in someone's inbox. It actually, this is years and years for me. I've been investing since I was 30 years old. So it's been years and years of looking at this thing on a regular basis. Also, I would say that I look at it on a regular basis because I'm looking for patterns. That's what I'm looking for. I'm looking for how something reacts to things in the market, right? So how did this react to COVID-19? How did this react to stimulus checks being given out? How did this react to lawsuits? How did this react? I'm always looking for how something react, because if it reacted that way in the past, more than likely it react that way in the future. And what we've seen how some things will react just on hope, right? The hope that a vaccine will be is going to come to pass. Things reacted a certain way, and then it didn't really happen at that time, but then now it might be here now. So I'm looking at how things reacted, and then the assumption would be that, well, if this thing were to really happen, it would probably react the same way. And so those are some things that I kind of use just as looking at patterns, looking at trends, looking at things, what has happened in the past, because the history does repeat itself more often than not, especially when it comes to business and how people feel about business itself. So at any rate, and then I guess as we talk and look at some things, maybe some questions will come up. If you guys got any questions, feel free to ask. Do I teach on this stuff? Yes, I do. I have a class on it, that you guys can feel free to take if you'd like to. I don't really set up one-on-ones for people who haven't taken a class, right? So if I have a class out there, you guys are like, hey, let me take this class, see if I can learn something. And then there's questions about that class. I feel more than happy to set up one-on-ones to discuss your next steps. But I feel like if you haven't done the initial work to invest in taking the class that I put together for that purpose, then I don't really see a point in me doing a one-on-one, because my time is just as valuable as anyone else's. So at any rate, I'll share with you where you can find that class. It is on the Black Billionaires Club, and we'll be right back to take a look at the market today, and then also start getting into COVID-19 stocks to watch as we start to move into 2021. All right, guys. So I think that was a great response from Ms. Rhonda Holmes, said that politics move the market. In the comments below, I'd like you to share some other things that you realize actually have a big effect on the movement of the market. What I've been able to do to be, to have some semblance of success. Obviously, I'm probably not the best investor in the world, but I do fairly well for myself. Is I'm able to, use my intuition to kind of predict what will happen in the future, because it's all about future. And I invest. I got a couple of different accounts that I use, but I've been teaching a lot about Cash App investing. And here's what's interesting, and here's what's to know about Cash App investing that way, or even if you're using Robinhood or Stash or something like that. You really are only able to really generate money one way, and that would be in depreciation of an asset, which would be something going up. There are, some apps that you use to do options and trading and stuff like that you can make money on the way down if you're betting against you're betting on the bear versus betting on the bull. I don't really do a lot of that because I think over time, I'm always looking at something over time. just consistently having my account grow over time. And then, after a year, 5 years, 3 years, 5 years, or whatever, I'm in no rush because I know that wealth is built over time. It's not built overnight, but you can kickstart that thing in a lot of different ways. So there are different methodologies, different ways that people, choose to invest. That's totally fine. I just want you all to be successful and all to have a semblance of an idea of, okay, well, this is kind of what this does. So we'll start by taking a look at what happened in the market today. I'm going to be over on CNN.com. I think that they have a great platform just from a visual standpoint. I'll also pull up Yahoo too. I want to look at Yahoo too, so I'm going to pull that up too. So I think Yahoo has been pretty cool too. If you come over to yahoo.com, just click on finance. And what I use Yahoo for is, number one, I use it to look at what, basically a breakdown of how the futures market is doing. Futures is going to be exactly what it says, betting on the future, the direction of something going on. But then I also use it for these track marks over to the right, which will be, companies that I've looked at in the past. I created my own little watch list, somewhat. Companies I've recently viewed, they keep me a list of things I've looked at and how they've done. Bitcoin, by the way, is at 21,442. In case you guys need to know that. In case you need to know that, you can come over to Coinbase for those that have been rocking with us for a little while. Might be able to look at Bitcoin right now is at 21,789. So it's approaching $22,000 per coin. I'll say cryptocurrency for another day, but yeah, Ethereum's up at 646. Litecoin is approaching $100 per coin. So a lot of people who have invested in cryptocurrency and held on through the up and the down are feeling pretty good about their money right about now. And a lot of money has moved over to cryptocurrency as an offset to what's happened to the pandemic. So that's had a big impact, a positive impact for cryptocurrency as well. So, but yeah, we're going back to Yahoo. So I use Yahoo for that, and then I'll come over here and I'll take a look at what's been trending. Wish, which is guys, if you don't know about Wish, is like a little place where you can buy stuff like a virtual Walmart. It went public today. It didn't do very well. They opened lower than the expected price range. DoorDash and Airbnb went public last Thursday. Airbnb is doing pretty well. DoorDash, not so much. And then we have active stocks. This is going to be where a lot of trading action is taking place. NIO is a competitor for Tesla. And then you have Apple, and then you have American Airlines. A lot of activity is going on in those particular places. I like to take a look at the gainers and the losers, although most of these companies are like, companies I don't really follow. But, I can, click here and I can get a list, which, again, I can take a look at and see if I recognize anything. The cool thing about why I like looking at gainers and losers is because each and every day I can look at something and then I can try to figure out, okay, why did it move the way did it move? And if it's likely to have this type of move again. So like I said, Airbnb, they actually jumped up 11% today. I was in Airbnb I got an Airbnb on Monday when it was down. And so my money actually jumped up 11% with Airbnb today as well. So I feel pretty good about that. So, so although it was, and I'll show you guys Airbnb in just a second. What's interesting about that, let's see if I can pull it up. Is that it's like, so over the past, what is this? So Airbnb opened on Thursday, right? They came down, which will be on the yesterday. Yesterday was Tuesday. So I actually invested in it on Monday. So we lost traction, but then it bounced right back up. This is kind of what happens with IPOs, by the way. They open up extremely high. overbought. And so I don't buy them the first day. I wait. If I'm going to get into it, I do believe in Airbnb, so I invested in it, and so now I feel pretty good that I waited. And I got it maybe about 130, something like that, 125, and now it's up to 138. So I'm actually up in my position with Airbnb, where some people who bought the day of, they might be down because I think it opened at 145 when the public or the secondary market could invest in it. So that's Airbnb. I think, and I'll talk about why I believe Airbnb is actually a good investment, although I still think it's overvaluated. I think it's too expensive, but I think it's a good investment because of what's going to happen. What I believe is going to happen with the return to travel. When travel opens back up, when people start moving around. Going from city to city, businesses, you're sending people out. When that happens again, that's going to bring back the even more Airbnb and people that want to use those spaces versus going to a hotel or something like that. So for me, it's all about what I believe is going to happen in the future. So I invest now for what I believe is going to happen in the future. So this is just a look at some things you can do on Yahoo Finance. CNN is just kind of a breakdown. I think it's a lot better visually to see what happened in the market today. The Dow was down 44 points. The NASDAQ was up 63 points. SP 500 6.55. These are all indexes. The NASDAQ has been doing very well for the year. That's where all your technology companies are. Of course, technology should have done good for the year because we had to use more technology this year than ever before. So hopefully you guys have some technology stocks in your portfolio if you are investing. Because if you have been, NASDAQ's up 41% for the year. 41% for the year for pretty much all your technology companies. That would be companies like Zoom, companies like Amazon, companies like Square, companies like Tesla. All of these are technology companies. And 2020 has been a great year for technology, although it hasn't necessarily been a great year for a lot of other companies or whatever. But that can change, right? Because we're going to be moving into a new year, hopefully moving into the vaccines being taken and given out and getting past coronavirus or COVID-19. And so I wanted to today take a look at some stocks, some sectors, and their impact and what we can, think about for the future. So in the comments below, let me start here as we dive into this coronavirus markets or COVID-19 markets. And I just mentioned that technology was an area, obviously 41% growth and for the year 2020, some heavily exceeded that. And this is why it's kind of important to kind of move money around. And this is what money managers do. They move money around because if they move money around to take advantage of, to get out of bad positions, to take advantage of good positions, and then they move it back later on when things change. So when things change, I believe we should change. We shouldn't just kind of hold the fort. I believe that's an old philosophy. Of course, if you're in something that's just going to keep doing what it's doing no matter what, but there are situations where you make some adjustments as things change in life. But for 2020, if you are, I guess if you do follow the market, if you are in the Wall Street, if you are investing or just looking at life, is there anything other than technology that you can say, man, should have done pretty well? Or even if you can't, come up with an answer to that, how about, any company that you feel like, man, should have done fairly well or should be doing well as we come to a close of 2020? And this is just from you looking at, you living life. I got a couple of things that came to mind, but you just living life and experiencing what you experienced during, social distancing and mask wearing and all that stuff through 2020. What are some companies or some sectors, some industries that you feel like should have done fairly well in 2020? And it may have had an impact on the value or the pricing of that company as it relates to the stock market. So I'll let you guys look at that. And then on the offset, we'll take a look at, well, what are some companies or some industries or some areas that didn't do well that got beaten, that got totally destroyed, and it lost a lot of value in 2020, right? So Vivi said China, you said are you saying that China should have done well? China is very interesting. The thing about China as it relates to, I believe that China itself did well, but as it relates to China in the market, I don't think it did as well as it should have, because our current administration, which is Trump, is all about against China, right? So the tariffs and the taxes for them to do business or continue to do business, has an impact on China. Also, China itself is starting to get regulated. That antitrust, foreign policy, things like that are is really saying, well, are we going to allow China to continue to mass produce and really be the importers of products, or are we going to focus on America being the manufacturer and the production and the producers of stuff? So the current administration, it's one of their biggest things was to make America great again, and part of that philosophy is that we have to deal with our biggest threat, which would be China. From China manufacturing to also to Chinese technology. We saw the thing that took place with Hawaii phones, right? And we saw the thing that took place with TikTok, right? We see these things take place that government stepped in and said, hey, we have to do a better job of keeping America strong, keeping America number one. And that had a big impact on how well China could have done, Chinese stocks and things like that. So that's very interesting. That's an interesting take. Not that they had a bad year, but I think they could have done even better had it not been for the fight against or the fight for dominance in the marketplace. Now, with that being said, what is the next administration going to do? Are they going to continue the path of, taxing these foreign governments to do business in America, or are they going to reenact, things like free trade agreements and things like that, where they don't have to pay? They don't have to pay taxes or absurdly high taxes to import or to bring stuff into the United States to do business or to capitalize in our capitalistic society. Also, with that question being in place, that we're going to also have to see whether they'll continue to list their companies on the American Stock Exchange. So if you didn't know, foreign companies, they have stock exchanges in their own countries. You do have a Tokyo Stock Exchange. You do have a Canadian Stock Exchange. And in those places where they have those exchanges, they're meant for their people to be able to invest in those exchanges for their marketplace. But we obviously understand that United States has the biggest Wall Street, so to speak, and so most of the time they want to have also a dual offering here in the States, so they can take advantage of all of the capital that's moving on our United States exchange. Yep, Japan 225 was going to Nikkei. Yep, so all of these are so we might start to see, depending on again how the next administration is going to handle foreign policy. You might start seeing these companies, just list in their own country versus listing in American stock exchange, give Americans the opportunity to invest in those companies as well. So anyway, that's a little bit about China. Again, following this stuff and mulling through this stuff is kind of how you have, you begin to understand a little bit better about how money moves and things like that. So China, I just didn't know the answers though. So I was thinking as well, I was like, hey, with the pandemic, some other companies that probably did well, like pizza joints, which were delivering pizza and stuff like that. A lot of people were probably ordering pizza a lot. So I would imagine that Domino's Pizza did very well during the pandemic, during this year. Walmart, places that stayed open, Walmart probably did well. during this year as well. So these are things I think that you can, if you just pay attention, you can kind of come up with some stuff like, yeah, they probably did well, yeah, they probably did bad. What we have up on the screen is there's something from CNN that they did to kind of parcel out some spaces where there should be some big impacts. And I was looking through this and I was saying to myself, man, this is going to be good. First, they have your major indexes again, your Dow Industrial, the S&P 500, NASDAQ, Composite Russell 200, 2000, which is your small company index. And what I'm going to do on all of these, I'm going to look at a 1 year chart for all of these. And we see here that with the indexes, pretty much they all did the same thing, except for the most part, all of them had a big dip in March when the coronavirus started, but they all roared back. They all roared back to even higher places now than they were before. So what does this tell you? It says, well, hey, when all the fear was going on with the coronavirus and, what's going to happen, what's going to go on. Well, what were we doing? We were starting to tell people, hey, this is a great time to invest. If you guys remember 9 months ago, I was saying, hey, this is a great time to start, taking some of that money and putting it into the market when it's 50% off. Well, lo and behold, we move into late March or early April. All of these indexes, which house all of these companies in a way, started to roar back. The Dow Jones went from under 20,000 to now up to 30,000. The S&P 500 under 2,500 to now approaching 4,000. The NASDAQ, which is that technology company, it went to almost 6,000 points, and it's up over 12,000 now. And the Russell 2000 index, which is their small businesses, small cap companies, it dropped down to 1,000, all approaching 2,000. So we're looking at if we look at not just the whole year, but the last 9 months, pretty much all of these indexes have brought back roughly a 50% type of return, I would say, give or take. I think the NASDAQ, pretty much about 50%. So if you start poor like I did, right? I started to put my money into this as much as I could afford into these spaces. And this is how I've seen my account grow so much in such a short amount of time, because we've had consistent growth for basically these indexes, these broad indexes, over 50% in the past 9 months, right? 9 months of growth. Now, I don't know too many places where opportunities like this exist, other than, when you run your own business and you have, you buy products and then you can resell those products, you make products, you resell those products, and you can, make, great profits. But a space where my money could be growing while I'm doing other stuff. And then again, to the tune of over 50%. And this is just the broad market. In 9 months, I think is extraordinary. So all those it's a terrible time in life as it relates to, living and stuff. Great time for your money, great time for opportunity for your money to grow. And I hope that some of you took advantage of, what I believe, again, I've said this before, one of the greatest wealth transfers of my lifetime. I haven't seen, I don't think I was really heavily investing in 2007 and 8 when we had the Great Recession. But that was another time where, things got terrible. But then once the storm had passed, things began to get great. And those who could foresee a bounce back and had stored up, saved up a little money and had something to put into these vehicles, they started to see their money grow. What's going on, Mr. Mark Daniels? Thanks so much for joining, man. Let me know who's here. If you're here, go ahead and let us know that you're here. What city, what state you're connecting from. Some of you guys I can see, some of you guys I can't. Mark Daniels, what's going on from joining us over on YouTube? Thanks so much for joining, man. Hopefully voice is coming in. Joshua Terry, what's going on, man? Where you connected from? What city, what state? I'm in Georgia, by the way. And yeah, I've been doing this for a little while, brother. I appreciate you. He said, hey, you like what I do for the community. Keep it up. Hey, I appreciate it, man. Thanks so much. Miss Jefferson, you got my last name. Tamara's out of Orlando. Thanks so much for joining here tonight as we're talking about the stock market. One thing you'll notice too, guys, when we start talking about money, it's not as interesting as football or anything like that. So I never expect our numbers to get super, super crazy. But you know, as long as people tune in, it's okay. Now, someone called me today and was talking about someone had given them a tip to invest in these vaccine companies, right? And so they have these vaccine hopefuls here, which would be you probably heard of Pfizer, which is starting to release their vaccine. You probably heard of Moderna by now, BioNTech, Johnson & Johnson. When I last came on, I think maybe 2 weeks ago, I don't know, last time I came on, I talked about this and said, well, what's very interesting about these vaccine hopefuls is one would think, okay, now that the vaccine is out or coming out or being released, that it's going to bring a lot of money into these particular companies. And if it's going to bring a lot of money to these particular companies, we should see their stock prices kind of go up, right? And I said like 2 weeks ago, I said, well, I don't believe that's going to be the case. These companies may have a lot of money come into them because the vaccine to be bought. But the interesting thing is when we start looking at the chart from a year ago, it looks like money has already been coming into these companies long before we even heard about it. So Pfizer, for example, which I believe is going to be the most well-established company that's a vaccine hopeful. It's in the Dow Jones Dow Jones Industrial Average. It pays a dividend. Very interesting that this Pfizer, just like we saw with the previous charts, it followed a very similar pattern. Back in March, it dropped just like other companies, and then you had a lot of money start to come in, but you had that money start coming in around June, and you had a big uptake from late September up until now. But look at what's going on in the latter part of Pfizer. Look at this. Last 5 days, there's been a decline. Now, one would think that it would keep on rising because now the vaccine is starting to be, I think we had our first person get their vaccine 2 days ago or something like that, but it's actually declining in value. It's going down. Maybe it's overpriced. I believe, looking at this chart, when I look at this chart, what it tells me is that before the coronavirus took place, or before COVID-19 took place, Pfizer was trading at about $36 a share. And once we get through coronavirus or whatever, the vaccine and stuff like that, I believe it'll probably be trading at about $36 per share. But if you are on the early whims of Pfizer being a company that can produce a vaccine or whatever the case may be, you might have gotten the Pfizer back in March and you could have went from, $28, $27 up to $40, but now $37, which is $10 on top of a $30 stock, which is about 30%. Not super exciting to me. But it looks like it's going to be trading right where it used to be as we get through a year of the pandemic. Do you guys see that? I'm just looking at Pfizer here. I'm just going to go one by one. So someone asked me about it. They say, hey, somebody told them to invest in Pfizer. I said, well, hey, I believe you. I don't believe you made any money. And guess what they said? No, I didn't make any money. I said, yeah, because, by the time you and I get the word on the street, it's old news, and so I don't believe you can use the news to help you make money. You have to be so in front of the news, and we'll talk about that tonight. Because a lot of things that's going to help you make some money is not even being talked about right now, not on the news. Moderna, company I had never heard of before this year. Very interesting here. They weren't even affected by a year chart. They weren't even affected by the COVID-19. Matter of fact, they since last year December they were trading flat, and they began to have a big rise as we got into March, and then they had the big spike late September, right up to $150. But guess what's happened over the past 5 days? They've been declining. So Moderna, which was probably good for investors, for traders. If you were a trader, you're an option trader, things like that, and you got wind of it early, maybe early September, you put some type of option on, you may have made some money. I'm not quite sure. But, for those that are saying, hey, let me get into it now, guess what? It's going the opposite direction. It's starting to flatten out. Now, the interesting thing about Moderna, we don't have any previous, history on where this thing used to be because it hadn't been around as long as Pfizer. But this is a startup, quite possibly a growth opportunity. but now it's starting to flatten out. I believe the money is already baked in to this company Moderna, and if you're investing in it now, I'm confident that you'll be losing money versus growing your money unless you are investing on the downside. BioNTech SE, again, another company I never heard of before this year, before the past 3 months. They have been working on the vaccine. Again, lo and behold, they weren't impacted by. We look at a year from now, they weren't impacted like Pfizer was, right? Pfizer had a big dip. BioNTech SE, they actually had a spike up, probably a pump and dump back in early or late February. And then they began to trade flat. Then they started to grow, come back down, grow some more. So they were trading at $40 per share at the beginning of the pandemic, roughly. Spiked all the way up to $120. Most of us probably didn't hear about it until it was about $80. And then guess what's happened over the past 5 days? When the vaccine is starting to be given out or whatever. They've been declining over the past 5 days. Very interesting. And so what this tells me is that there are some people who know this stuff, who are in the know, who are able to make money way before you and I get in the know. This is why I just don't, again, I don't subscribe to trying to follow the money that, when they are well aware, they are aware way before I am. Now, Johnson & Johnson is interesting. Again, Johnson & Johnson is a pharmaceutical company that's in the S&P 500. I mean, the Dow. It's a company that's been around for a while, pays a dividend. They've been doing very well, got a lot of history. But guess what? Same thing we saw with Pfizer. Johnson & Johnson took a huge hit in the beginning of the pandemic, back in early March, late February, early March. Then they had their meteoric rise right back. Again, Johnstown, well, great. You got in at 100, 110, 115. You rode that thing up to 150. You feeling pretty good. You got your dividend in that short amount of time. Johnstown roared right back. They didn't take them no time to roar back after the pandemic. That was an opportunity for those. And this had nothing to do with the vaccine. This had everything to do with the strength of Johnson & Johnson. Well, guess what? Johnson & Johnson traded about $150 per share before the pandemic, and guess what they're trading at today? $150. So what does that say? Well, if you were a Johnson & Johnson investor and you were investing before the pandemic happened, you're just back to ground zero. If you're a person that that saw this happen and said, man, let me put my money in Johnson & Johnson, you're probably feeling pretty good because you got about $110, $115 up to $150. That represents maybe a 20-25% growth for your money in that short amount of time. Now you're just kind of riding the sideways conversion over the past 8 months, collecting a dividend, feeling pretty good about yourself. If you're a person that got in after that time, and now you're looking at Johnson as a potential growth opportunity, it's probably not there. Johnson Johnson doesn't really grow like that. Johnson Johnson is more stable. They stay kind of where they are. We can see that in this 1 year chart. They probably have some growth over time, over a long period of time if you've been in Johnson Johnson for a while. But you're really pretty much investing in a stable company that's paying a dividend but not giving you much growth. Do you guys see that? Now I'm just doing this just from looking at a chart, right? I'm not going to get into all of the fundamentals of the company. I'm just going to do chart reading today, just so we can kind of get an idea of what's happened with the movement of the price of these companies, because at the end of the day, right, when I put my money or I buy something, I'm not buying it based on price, but I'm buying it at a price. And then that price goes up or down, and my money goes up or down with it. So Rhonda Holmes said, Pfizer, I lost a few dollars made, some on energy stocks and cannabis. Do you like mutual funds, index funds better? Vanguard, small caps, cruise line. I know lots of questions. Florida, by way of Georgia. What's going on, Rhonda? So yes, energy stocks has made a big comeback. I don't think that's on this tab. Maybe it is. Cannabis. Cannabis took off once cannabis has a quality future. As if the new not even if, it's just a matter of time, right? But if the new regime really does what they say they're going to do, then I think cannabis has a very, very bright future. And I think it's inevitable. I think it's inevitable. I don't know how soon or how fast, but I think it's inevitable. there's a couple of things I think are inevitable, right? So cannabis, I believe, is inevitable over time, right? The same way that I thought about Bitcoin. I said, it's inevitable. Like when you have cannabis bills, that people vote on, and all of those bills that were on platforms to vote, every state got passed, then that's inevitable to me because the people want the legalization of cannabis. So it's going to happen. There's no way that a senator, a governor, any legislature can stop it from happening when the people that you represent want it to happen. So it's just a matter of time. So I believe that's inevitable, right? But again, to me, it's an overtime experience, right? There's some people trying to get into something and they want instant gratification. They want their money back tomorrow. Well, if you have a look at it that way, then you're going to take some losses with your highs with your lows. But when you're looking at it from a long-term perspective, well, to me, it's inevitable because we just seen the people vote unanimously that they want it, and if the people want it, the people get it because we run this thing, and it's just a matter of time. So as more and more states open up, as regulations become less and less, as we start to see payment processing, accept this stuff as legal now, because you still have all this red tape in this industry, but I think it's inevitable. So I have added some. It's a smaller exposure for me because it's a bigger risk for me. Because when I think of risk, I kind of look at stuff. I say, well, how risky is this for me in my portfolio? And then I base that, and then based upon that, determines how much I'm willing to invest in that particular space. So the higher the risk, the less I'm willing to invest, because I'm not willing to lose a lot either over that period of time either. The less the risk for me, the more I'm willing to invest in something, right? So I'll take a flyer on a cannabis company, but if I lose $50, it's not going to be a big deal. Or I lose $100, or I use $1,000, it's not going to be a big deal. Versus if I lose 5,000 or something like that. So the higher the risk, the smaller the investment from my portfolio standpoint. Mutual funds, index funds are great. I think that they are. It still comes down to the sector that you're investing in. I don't know about small caps. Small caps right now. Small caps right now, I would probably wait on small caps. The reason why, because there's still until the jobs come back, until people really, until we really get back to some type of normalization as far as people and employment. I think small cap companies are going to be very difficult because they're easier. They're more likely to, not more likely. It's more probable that they'll go out of business before a large cap company because they have less money to work with. They might not be getting as much help as possible. I mean, because if I was a government, right, I'm going to save a Walmart before, which is a large cap company, before I save a mom and pop, because a Walmart employs more people. It keeps more people working than the mom and pop or the 3 region store or something like that. So someone said, explain small cap. So companies are categorized by their how big they are. So so like I said, a Walmart is considered a large cap company. They're just a huge company that's got a lot of dollars. They're worldwide or they're nationwide. A lot of stores. Large cap company. The capitalization, I think, is over 100 billion or something like that. I don't know all the numbers. Then you have mid cap, and then you have small cap. So basically, a way to kind of look at mid cap, small cap, mid cap, large cap. Obviously, size of company, and then also potential for growth. A small cap company has a greater potential for growth because it has more of a market that they can penetrate than a large cap. A large cap is pretty much penetrated as much market as they can. They don't have really a lot of room to grow unless they acquire new businesses, which is buying the small cap companies or something like that, adding a new line of business, which would be like Amazon, adding Fresh Market or something like that. So But a small cap company has more room to grow. They got more territories to penetrate. They can go from being just in the southeast to now, moving to the northeast, and then moving west, and then adding some stores or some businesses there as well. So cap size is just about basically the size of the company. But a smaller cap company is riskier than a larger cap company, for some of the reasons I just said. And during a time like this, I'm not really willing to invest a lot in something that's super risky that could go out of business tomorrow. Not that it will happen, but it's more likely. It's more likely to happen for a small cap company than it is a large cap company. Just simply because, we got to keep people working. We got to keep people employed. So that's hopefully that answered that question a little bit. So cruise line as well, Rhonda. I am a big fan of cruise lines. And we're gonna get to that too. I'm a big fan of cruise line. As I read more and more about cruise lines, I read about when they plan to open back up, how long they're suspending their cruises. And I believe the latest I read was like March, right? So as the vaccine kind of gets taken and stuff like that, and people start to feel like the land is healing, we might still have some practices in place, but I believe that people are going to start by spring and summer. If they haven't been on a cruise, if they are cruisers, they like to travel the world, and that's their way they like to wish to travel. I believe it'll be safer to be. I don't know. What do you guys think? Do you think it'll be safer to be on a cruise than to be on a ship than a plane? I think it will be. You're on the water. You're in the open air. You can probably quarantine a lot better if something were to happen on the ship. I don't know. Will the ship get? I don't know. I don't know the answer to that. But I believe that I'm a big believer in the cruise industry and the bounce back of the cruise industry. We'll take a look at that in a second. Again, you guys got questions, man. I'll answer them to the best of my ability. I've never heard of AstraZeneca or Novavax. Again, I'm just looking at these year things. I keep going. Therapeutic stocks. These are again pharmaceutical companies. Regeneron. I think you probably heard of Gilead. Gilead, very interesting here. Look at this. Gilead Sciences, a pharmaceutical company, did well through the pandemic. Up and through about April, May, and then they've been on decline ever since. They've been going the wrong direction for the past 6 months. Regeneron Pharmaceuticals, pharmaceutical company did well during the pandemic up through June, July, and they've been declining ever since. Very interesting. We just look at the chart. They're on the decline. Sorrento Therapeutics, whatever that is, again, they were rising through again, same amount of time. Big spike up in middle of June, July, and they've been declining ever since. Amgen Incorporated, Amgen, never heard of that. I'm not a big pharmaceutical person, but people that's in healthcare, people that's in pharmaceutical, this stuff you guys should probably know. This followed a very similar pattern as we saw with Pfizer, drop down during the pandemic, rise back up. They were trading at about $240 before the pandemic. Now they're trading at $228. They'll probably be trading about $228 moving forward. It's getting back to what they've been doing, but we do see that they've been on a longer term kind of upward movement for Amgen. But I'm not a pharmaceutical person, so I don't really. That's not my lane. But for those that's just your lane, this is probably where you'll be. I like to tell people to stay in your lane, to follow stuff that you're passionate about. It's too many companies to be trying to follow everything. I started, guys, with looking at stuff I believed in, looking at stuff that I used. I started there, right? So, when I'm heavily invested in Facebook because I'm on Facebook every day, right? And I see, how Facebook kind of taking over the whole social media world, and they bought Instagram, or they own WhatsApp and all that stuff. I'm heavily invested in Facebook because I use it all the time. But I didn't just invest in Facebook because I used it. I understood what I was using, and I realized that Facebook had become commonplace. It became something that people look forward to using every day. It was almost like washing your face. Like, you go taking a shower every day. You're gonna be on Facebook every day. You take a shower. It became commonplace. It became a verb, kind of like Google. When you say Google it, that became a verb. Now when people say, "Hey, can you take payment? Do you take payments?" I'll be moving around the city. How do you take payment? I say cash or cash out. Cash out became a verb. It became a verb. When it became a verb, when I realized it became a verb, I said I wanted to invest in it because it became commonplace. Right? Everybody putting comments on comment. That's where I started. I started with stuff that became common. I didn't start with stuff that I never heard about, like Amgen, never heard about it. I just wouldn't be. I don't need to travel in that area in order to get rich. I can just stay with stuff that common. Now, here's my thought process. Here's why I think this way. And it's not that you can't go off into the weeds and go find stuff and all that stuff. The reason why I think this way, because I run a business, right? And the business I run is a retail business, right? I sell a lot of different types of stuff. But there's certain things that I realize that in what I sell, people are going to buy anyway. It's become commonplace. For example, right? I sell sheets. People buy sheets year round. I can literally just sell sheets the rest of my life and be okay. I just added socks. People buy socks. They lose socks. They sell socks. They buy socks all the time. I'm gonna add washcloths. These are just things that people want to buy anyway. They're going to use anyway. It became common. Versus some of the more exotic stuff that I sell, like the CBD products. Yeah, that's stuff that people buy, but they don't have to have it. It's not like an everyday thing. But them sheets, they buying it every day. So my thoughts have changed as I've done business, and I realized, okay, here's some things that are common that we're going to use anyway, and here's some things that have become common. And that's where I started before I started getting off into more exotic type of investing and looking at stuff that, and try to understand stuff that I didn't really had no circle no circle of competence in. I just started getting to stuff like steel and aluminum. I'm not in those fields, but I'm beginning to understand it better because it's connected to airplanes. It's connected. If somebody gonna make an airplane, they're gonna need steel and aluminum. That's how I looked at it. I didn't want to invest in the airline company. I wanted to invest in the stuff that they make the airline they make the planes with. So that's how I got into those spaces. I just started using my little common knowledge to find some stuff that ain't nobody talking about. So anyway, stay-at-home stocks. Again, 8:52. Wow. Time flies, I'll tell you guys. I'll probably try to be on another 30 minutes. Netflix, again, stay at home. Netflix did very well during the pandemic, right? Dropped down about $300 per share. It's trading now at $500 a share. So it basically that represents over 50%. No, less than 50%. 300 to 500, 200 over 300. That represents a 67% increase, basically, over the past 9 months, just in Netflix alone, right? Now, I'm pretty sure if those that are watching right now, many of you guys have a Netflix account. You've heard of Netflix. You've used Netflix in some way, some form, some fashion. But, have you put yourself in position during this pandemic where people are just, Netflix it is, to help your money grow. I would also say, though, if you missed the boat on Netflix, which many of us may have, Netflix has some competition now. What's happening in this space is that, you have other streaming services. Everybody's, starting to add on their own streaming service. For example, Facebook has their own streaming service. I'm pretty sure they'll have their own out pretty soon. You can watch movies on Facebook if you wanted to. You can watch people on Facebook. Maybe not movies, but people on Facebook if you wanted to. Google has their own, which is YouTube. They have their own streaming services. You can rent movies and buy movies from YouTube and watch them right there on demand if you want to. They have that now. You have Hulu and Roku, which are TV streaming services. And then you have the biggest competition, I believe, for Netflix is going to be Disney Plus. Because Disney has said, you know what, instead of us renting out our content and letting Netflix make the money off of content that are made in our studios, we're going to have our own streaming services that if you want to watch anything from Disney, you got to own Disney. You got to get Disney Plus. And so for, parents who got kids and, they want to keep them entertained watching some of the cartoons and stuff like that, they got to get Disney Plus. Then we just had HBO, which is very interesting. HBO Max, which I don't know who owns HBO, but HBO Max just announced that when movies come out, that they're in 2021, when they release a movie, they're going to release it on their HBO Max streaming at the same time. So this is going to have impact. This is going to bring competition into the streaming service space, but then it's also going to have a big impact on the movie theater space, right? I don't think movie theaters ever be the same. I don't even know. That's one place I don't think that they'll recover. I don't think, like, there's some things that have been hit during this time in 2020 that I don't think will ever recover. And one of those is the movie theater. Not that we won't have movie theaters, in the future, but when a movie comes out and you have the option to go to the movies, pay all that money, all that high-priced popcorn to have that experience versus now we can just watch it on our TV and all we got to do is pay $9.99 and we can get all the new movies that come out, and then we can just cook at home or go pop our own popcorn, or we can, make whatever, do a little movie night, whatever. I think people are going to begin to be choosing, let's not go to the movie theater no more. Why do we need to go to the movie theater? So I don't believe that movie theater is going to recover like to the space that they were before. Not that there won't be some slight recovery in movie stock, but that's a big hit. When a new release, I mean, think about it. Like when I was going to the movies, I don't even remember last time I went to the movies, but back in the day, right, a movie would come out, it'll be in a movie theater for 2 months, maybe 3 months before it disappears for a while. And then maybe 6 months later, you'll start to see it come on Showtime, HBO, things like that, whoever rents it out or whatever. That's back in the day. And then recently, a movie will come out. Then it'll be in a movie theater for maybe 3 weeks before you start to see it, on Showtime, HBO, wherever it is that you watch, Netflix or whatever, right? Now it's getting to a space. This is a trend, right? Now it's getting to a space where now when it's released in the movie theaters, it's coming out the same day on your streaming platforms, right? So you see that trend that's taking place where it's less and less of an exclusivity thing for a movie that you might want to see, where you can only go see it the day it come out. You can only go see it at the movie theater. That's becoming extinct. So this is a big hit, I believe, to the movie theater experience or the theater industry or sector as we have known it. I don't think it ever recovered. So that wouldn't be a place for me. Oh, HBO is owned by Time Warner. Thanks so much, Brother Mark. That wouldn't be a place for me that I'd be like, okay, I'm looking at the future of the theater. It was hit hard, and I'm putting my money there for it to bounce back. That just wouldn't be a place for me because I don't believe in this future. You might believe in this future. I don't. So, but I would say, okay, let me look over here at Disney Plus, which is owned by Disney. This is what interesting. Let me tell you something. Here's what's interesting about Disney. What's interesting about Disney is I think Disney is in a phenomenal space for a lot. I mean, I think Disney, let me go out and say this. I believe Disney is probably one of the better stocks to own in 2021. And here's the reason why. Number one, they are diverse, right? So, you may only think of Disney as being a resort or a place that you can go and have fun or whatever the case may be. Disney is much bigger than that. Obviously, and also I would say another reason why I love Disney is because they're able to adapt. With Disney owning ESPN and ABC, they have adapted to say, okay, well, the TV industry is on a decline. Streaming is up. So let's get into streaming, Disney Plus, and that's where we're going to put our focus at. We'll still have these little things over here that, we have to make adjustments on, but here's where the money is at, and they go to where the money is. When the vaccine and stuff, when we get into 2021, when we start to begin to the end of the COVID-19 experience, people start traveling. Guess what? They go to resorts, and one of the resorts they go to is Disney. Guess what? Disney also has cruise lines. So when people are going on a cruise, they go get back to using Disney as a cruising option for them. So Disney is diverse and is touching a lot of spaces that either A, got them through to be successful through the pandemic, or B, should have a boost when the pandemic is over. I believe Disney, now that I'm thinking about it, now I'm talking about, plus they pay a dividend. Let me, you know what? Let me look at Disney for you real quick. I believe Disney is in a great space to have a great 2021. Now, this is not investing advice. I'm just sharing with you guys what I believe now that I'm thinking about it. In all these different spaces, stay-at-home stocks, they took care of that. They're in transportation. They're in resorts. And I'm thinking about these spaces that have been beat down that'll recover. Plus, they're already in a space that's been doing fairly well. Let's take a look at Disney. Why not? So you just never know where I'm gonna go. I'll go look at all this stuff. I'll come back to it. We'll get into it. Airlines, hotel stocks, cruises. Let's look at Disney. So, interesting stuff. I like it better on the other one. Yeah, let's go back. I'm gonna go back out and I'll come back in. I like the bigger chart. Anyway, Disney right now is trading $173.13. Again, their chart, man, they hit that pandemic in March, just like everybody else. They dropped down to about $85 per share. Ever since then, they've been on the rise. And guess what, guys? They went from $85 per share to $173. That represents over 100% increase. Walt Disney in 9 months, right? So Walt Disney increased over 100% in value in 9 months. They were trading at $140 per share before the pandemic. They had just got up to that point, $140 per share, but they've always been increasing. So as you can see in 2020, man, for those who know and I'm a Disney investor as well, and I'm feeling pretty good about my Disney investment. But boom, got in undervalued, under the trend at about 85, even at $100 per share, it doesn't matter. And now we're up to $173.13 per share for Walt Disney. And we have not even gotten to a space where cruises, concerts, and theme parks really, really ramp up as we move into, I believe, March, April, May of 2021, 6 months away. So I had one of my family members contacted me and said, hey, they wanted to, they came into some money. And they wanted me to help them, put together a plan. And you guarantee you, I'm gonna tell them one of the spaces they to put their money at is gonna be Walt Disney. I believe it's gonna be a great space for 2021. Now, the cool thing about Disney as well, I'm really digging this. Cool thing about Disney as well. Now that I'm talking about it, now that I got my thoughts on Disney. So here you have the same thing. You come over to, I like coming straight over to the company itself. We can see, same thing. They're showing the same charts, 6 months. So past 6 months, they've been up from $120, $109, they're up to $173.12 now. What else they got here? Oh, you can have an account here if you wanted to. I believe they pay a dividend too. Quarterly earnings. You know, all this information. SEC filings. Look at this stuff. All this stuff. What am I looking for? I believe they pay a dividend too. I'm just trying to find out where it is so I can show you guys. Earnings, annual reports. Here's some news from Disney. Shareholders meeting for March 9th. Oh, that's going to be interesting. So their first shareholder meeting of 2021 is going to be March 9th. I don't know where to find it at, guys. I'm sorry. I don't know why it's not easy to see here. Well, I guess it'll come all the way down here. So they do pay a dividend. Okay, the Walt Disney Corporation announced November 12th that it will forego payment of a semi-annual cash dividend for the second half of fiscal 2020. And like ongoing impact, the company's decision to prioritize investment direct to consumers. All right, so they delayed their their latest dividend payment. So you guys, they answer all this stuff here. They did pay out in on December 4th, and that was at 88 cents per share. So I guess when they reinstate the dividends, you're looking at basically almost $1 per share. For every share that you own of Disney, they probably will be paying out 88 cents or more per share. And it would make sense for them to bring back their dividend with their stock price having increased so much as well over the last 6 months. So obviously, $318 billion company for Disney. I see great things for this company here. I think they're well run. They did fire, had to do some firing a little bit, had to let some people go, but they'll be rehiring as business picks back up. There's so many different things. I don't think we may not get a lot of information from them either. Look at this Q2. See, I want to see Q3. Yeah, we don't have the latest information from them either. But anyway, I believe that Disney might be one of those stocks to absolutely own. What'd you say, Mark? They said with the new Marvel coming out, they are well positioned. They surely are well positioned for the future. Walt Disney, I think is great. Great, is well set up. So I'm going to probably do a part 2, 3, 4 of these because there's so many different ones to go through. Netflix, Peloton Interactive. I'll stop after we get through the stay at home, and we'll come back and we'll do the work from home stocks and all that stuff as well. Peloton, whatever that is, they didn't have an impact from they were probably irrelevant, I would say, before the pandemic. But whatever Peloton does has skyrocketed. Probably their technology allow you to stay at home and do something. We can find it out. But guess what? Pandemic was good for them. They went from basically about a $25 per share company. Now they're at $134 per share 9 months later. We're looking at this time frame between March and now, right? Grubhub, which is it kind of got hit by the pandemic. I don't necessarily know if I believe too much in Grubhub, but at any rate, they were trading roughly about $60 per share before the pandemic. They're at $71.29 now. They had a hit during the pandemic down to about $30 per share. Now they're up to $71. But again, Grubhub is kind of looks like they're still kind of moving up. But again, as the pandemic comes to a close, I would foresee Grubhub having a decline because it's not going to be stay at home. It's coming to a close companies are starting to say, I think Google said that they'll keep their people at home through September or something like that. But these are kind of like time frames that you can kind of get an idea. Say, okay, well, here's where the prediction is that this stuff will come to a close. Teladoc Health, I believe that's probably some type of virtual health management type of facility company. Teladoc, I mean, obviously some type of virtual healthcare, probably. Which, if you're in healthcare, you probably know about this. But look at this. They were trading. They had COVID-19 was good for them. They were trading at under $100 a year ago. They were up to about 150 when the pandemic hit. And now they're trading 187. So not very bad. They jumped up all the way to $250 at one point in time in mid-June, and they've been on a decline ever since. But the decline is getting right back to their normalcy, which is about $200 per share. That's Teladoc Health. So we're starting to see, if you look at, look at patterns, right? Look at, okay, how is something doing? How has it done? And, what do you project it to do in the future as things change? We know more than likely the stay-at-home stuff is going to come to an end. I believe Netflix will probably still do well, but they got a lot of competition. Some of these things, for some, they'll stay at home. They won't be going back to the office, especially if they're, have a huge impact. probably elderly, getting a little age, getting close to retirement, stuff like that. They may not go back to the office, right? They may stay at home, but generally speaking, more of the population will get back into some type of working environment for the most part. But we also understand now that if a company did want to, and this would probably be a wave of the future, that these companies do have the capabilities of working virtually. Most of them, this has opened up new thought process and new belief for a lot of these companies. Most of them already had a few people working at home or did some type of virtual working, but now they see that, well, we can go all virtual if we wanted to, and that may be a way that they go. This whole pandemic is a game changer for a lot of society. Once we realize that we can do a lot of this stuff that we want to do from home, it may become more of a normal thing to get hired to work from home than it would be to have, unless you have to, you're a doctor or something like that. You have to, you're a mechanic. You have to, you're hands-on. If you don't have to be hands-on, it's going to save these companies a lot of money. They won't have to have as much space. They can use technology. And they can probably offer it as a perk or benefit for your tenure. You're here for 2 years, 3 years, or whatever. You're working from home 100% of the time. So these are some things that's changing the way which people do business. But it's also as the way in which people do business change, then those companies that help bring this change into reality, they benefit from it. And recognizing some of these sectors, recognizing some of these companies can help you put your money in a place where it can grow. And that's what I got to say about that. Faith Peloton deals with fitness. Look at that. So some virtual fitness. I was close. I just looked at the name. Telehealth. Oh, Peloton. It's that fancy cycling bike. Oh, really? Oh, yeah. So a lot of people, and then we're gonna be moving into January. People gonna be saying they're gonna get healthy again. All right. So Peloton. Oh, I didn't realize that. Look at that, Peloton. Look at that. Appreciate you guys. So Peloton. See, like I told you, I don't know all these companies. There's too many companies to know what everyone does. That obviously isn't my lane. But in case you want to know, if you ever like, what is that? You can always come here. Oh, I guess they don't have no profile. No description on that. But, you can always do a little quick Google or something like that and find out what it is. So, yeah, so some cycling. So look at this. This is growth. See, to me, like, this is one of those small cap companies that, it's hard to, okay, let me ask you guys this. Is Peloton, so it's a small cap company, I imagine. Yeah, small cap company, $34 billion company. It's been growing, probably had the best year it's had during 2020. But the question, I guess, would be, for those that are familiar with Peloton, what do you expect? Let me look at this thing. Hold on a second. Yeah, so look at this. So I guess they've been around since 2019. They've been trading at, basically under $50 for a year and a half. And then pandemic kind of comes in and they start to take off. People are, I guess, doing, it makes sense, right? So people are working out at home versus going to the gym. That makes sense. But as gyms open up and we get through the coronavirus, do you think that Peloton will still be, do you think that this surge is just because of the pandemic and what people had to do to still do what they wanted to do? Or do you think that Peloton is like a viable long-term growth company? See, it's hard for me to believe that a year from now, Peloton Interactive will be as popular as it is right now. I guess that's a good word. You're right. I just, it's to me, it feels gimmicky, right? It feels gimmicky. Like to me, it feels gimmicky. Like once things open up and people can go, because the thing about going to the gym, it's not that you can't work out at home. I mean, people can do that. People can choose to do that anytime. It's about being around other people. Like that's one thing. That's the reason why the gym is kind of popular. Not only can you go work out, but you can actually be around other people, even if you don't talk to nobody else. Some people like just being around other people. And watching other people work out can motivate you to work out. I mean, they make all this stuff for you watch it on TV or get your little DVD or whatever. That stuff don't really work. Sometimes you got to be around other people to get motivated to go work out and do what you need to do. So do you feel like it's like just a right now type of thing? See, this to me it's almost like I would be chasing this if I were to. Again, if you like Peloton, you use this stuff, go invest in it, whatever. But for me, I feel like, dang, this thing grew from over 200%. Seems like, $50 to $150. That's 200% growth in 9 months. But then, what happens in another 9 months? Will it be as popular, as exciting? See, I think this would have been to me, this would have been great for that short-term investor, right? I'm not a short-term investor. I'm a long-term investor. But this would have been great for a short-term investor because and on two sides. Number one, it would be great for the run-up, but I also believe it'll be good for the short-term investor when it begins to lose some of its steam. And then they can bet on the downside. Right now, it's trading at its all-time high. It's testing that 135 area twice. It looks like it's going to bounce back again. And if it tests it one more time, it's probably not going to break that 135, especially in the next 6 months as we begin to open things back up. So to me, I'm more apt to bet that this will decline. It'll be lower 6 months from now than it is today. That would be my guess. What do you guys think? What's going on, Prince? So yeah, mate. So the cool thing is, if you short term, you might say, okay, well, let me go ahead and get this next 3 months because people gonna hit their New Year's resolutions. They say they can't still go to the gym. They're gonna have to get them something. They might get them a little Peloton bike or whatever. How many guys? Let me ask you guys a question. How many guys got have invested in a fitness bike of some sort, fitness equipment of some sort, and it's in your garage or it's in your basement, or you end up giving it away because it was too hard to move, or you just really didn't, you used it. It was exciting when you first started, but then for some reason you don't go to it every day. Oh yeah, Rhonda said, "Hey, it was in the Super Bowl commercial." Oh, it was a Super Bowl. So okay, so Super Bowl of 2020, Super Bowl commercial was before the pandemic. My cousin has one. But again, so Super Bowl was in February, right? The Super Bowl was before the pandemic, so this seems like a perfect storm for them, right? So they had, they come out with their product. They've been out for a year and a half, but maybe they come up with this new bike that's cyclical, whatever. And boom, they hit the commercial. Everybody see the commercial. They paid $millions, millions of dollars. They had a commercial running the Super Bowl. So now it's top of mind. Boom, pandemic hit 3 weeks later, right? So Super Bowl end of February or middle of February. Pandemic hits middle of March, so that's a month later, right? And they just happen to have a great product at the right time, at the right moment. Sounds like a perfect storm. But storms don't last forever. Right. So, so here's another thing, Rhonda. Man, it feels good. How good would it feel to have bought the bike to work out, and then you also got the stock so that your money could be working out too. Got the bike, working out, feeling good, getting fit. Is your money getting fit with it too? Because they could have invested in the stock as well at the same time they bought this bike. Right? Put a little extra money. Let's say the bike, I don't even know how to spot. Let's just say the bike is expensive. I'm going to say if it's expensive, it's an expensive bike. Let's just say it's $500. Well, the stock was $50. So let's just say they put $500. They put $500, bought the bike, $500 to into the stock at the time. So $500 into 50, that's 10 shares. $500 growing at a 200% clip. That $500 now be worth $1,500. They could have bought 3 bikes. This is why to me investing is so powerful, right? Because I can look at it and say, oh, okay, I got the bike. It was expensive. I spent up my little money on my bike. I'm feeling good. I'm feeling fit. I'm working out at home, whatever the case may be. But did I ever think to look at who made the bike? And do they offer, are they publicly traded? Can I invest in the company that made the bike? Someone spend all this money and spend all this money into the company. How about I think about becoming a part owner of the company if I feel it's the right thing to do? And if they had done that at the time they bought the bike, I'd imagine right around March, whatever, they'd have been investing under $50 per share. I'm just using that as a guess mark. Same money they put into the bike, their money could have doubled or tripled had they also bought the stock. You see what I'm saying? You see how powerful it is when we start thinking about owning the stuff that we use. Now, I'm not saying own everything that you use, because some of the stuff that you use or some of the stuff that you go spend your money on, those companies ain't worth nothing. Those companies are going out of business. Some of you guys still like to shop at JCPenney. I wouldn't say invest in it, right? That's for the old cats. Y'all still like JCPenney, right? But it ain't the way for the future. It's not what's up for the future. You know, ain't no younger folks ain't going to JCPenney. You know, younger folks shopping online. Look at that. Mark said, I have a couple of sets of weights that are more inconvenient to move from places. Yeah, I remember when I had that. I remember when a buddy of mine, he was moving. The hardest thing to move was that damn treadmill. Had the treadmill. We were like, how are we gonna get this thing out? It was the most difficult. It was more difficult than the couch, more difficult than the bed. It was the most difficult thing to move when he decided to move with that treadmill. And that told me I just rather go to the gym and use the treadmill than have a treadmill in my house. Because if I end up moving, that treadmill ain't coming with me. But at any rate, yeah, so did you guys see just looking at this Peloton example, you see how powerful it is to look at, okay, that example, man, of me owning something that I'm using and spending all that money on the whatever, however much the bike costs. It's probably a great bike. You know, it probably maybe used often and while the enthusiasm is high. But even after they stop using the bike, if they do, their money could still be working. And just by owning some of the great companies that we use, looking into it, our money could be growing as well. So that's kind of what I wanted to show you guys. I'm glad we had this example. But I believe it's chasing money at this point. Okay. I believe it's chasing money at this point. I just don't see, and I could be wrong. I could be dead wrong. But I bet on my intuition that 6 months from now, it won't be I think it's going to lose a lot of value as markets open back up, as gyms are opening up. Our gyms are already back opening, but as people start getting back out into being around people and stuff like that, I think this will become an afterthought for the majority of America. I wonder if they're going to have an advertising in the Super Bowl this year or in 2020, in the next couple months when they have the Super Bowl in February again. So anyway, we took a look today at again, this is on CNN, guys. You guys can find this on CNN. It's just a little composite of the coronavirus markets dashboard that they have kind of created to track stock sectors, indicators most impacted in real time. And we didn't even get to the good stuff. We looked at well, I consider it to be good stuff. Vaccines. A lot of you guys have been, maybe chasing money in these vaccines. I don't believe that's where the money is. But it is some quality companies that you can do okay in. It depends on what you're trying to do, what you're trying to accomplish. We looked at these therapeutic stocks. Again, a lot of them have been on decline. A lot of pharmaceutical companies have been on decline. Very interested in their decline. And we looked at these stay-at-home stocks, and we talked extensively about Netflix and Peloton. Then we got this Teledoc and Grubhub company as well. And I think one of the biggest things that kind of came from our time here today, the outcome, number one, cryptocurrency, 21,821 as far as Bitcoin is concerned. I'll probably do some type of presentation on Bitcoin at some point. Also, looking at this one of my beliefs for 2021, Walt Disney company, still doing well with their adjustments and their flexibility, and then have a lot of income, a lot of profits waiting on them when things open back up for the spaces that they've had to kind of cut ties on with the cruises, the transportation, the theme parks and stuff like that. We'll look at. I don't know if that's on the next section or not. Let's see, because I'm gonna come back and we're gonna look at this. So next we'll be talking about work from home stocks. Oh, then stocking up stocks. The airline stocks. We're gonna start getting to some more good stuff here. I'm gonna do another segment of this. I don't know when, but just make sure you like, subscribe, stuff like that. I do schedule it, and when I schedule it, you'll get a notification. And then, hopefully you're here to tune in with this as we look more at the market and these coronavirus sectors of stocks. In the comments below, I'd like for you to share something that you learned today. Hopefully, you've had a good time sharing with us today. It's been time flies. I forgot how fast time goes when we start talking about this stuff. I've been on an hour and a half. Wow. But I'd like for you to share something that you learned today, something that was intriguing to you. This is not commonplace stuff that people are talking about. People have a conversation about trying to figure out how they're going to make their money work for them instead of them always working for their money. We're looking at some companies that have grown, 50%, 100%, 200% in 9 months during this pandemic. So while there's doom and gloom on Main Street, there's not necessarily the same sentiment when it comes to Wall Street. And but we can have we can't have our money working for us in these spaces. We just have to choose to learn, tune into stuff like this or whatever it is that you tune into and start thinking about, you're thinking about what you're thinking about the future, things like that. So, yeah. So, man, love to know what you learned today. Was it beneficial, helpful for you? I have my own style of discussion and talking and teaching and stuff like that, but hopefully it vibes with some people. And, I can be a good resource for you in this space of investing, man. I've been doing this for about 10 years. Yeah, time flies. About 10 years. So, here's what it is. Glenda Tate Williams, what's going on? Said learned about how to look at the trends and ways to determine good investments in the future. Hey, yeah, good stuff. Good stuff. Anybody else? Something that you learned today? We don't do this just to do this to make a difference. And hopefully we made a difference in your life tonight. Anybody else? They gave away a home trainer and bike, all that stuff, man. I realize it is wise to invest in affiliated with COVID short term. Yeah, yeah. I think we have to begin to look beyond COVID-19. I think that's if you're a long-term investor, you got to start looking beyond COVID-19. COVID-19 is the short term, is the immediate, is stuff we have to deal with on a daily basis. But as we look beyond it, that's where I think you can really begin to put your money to work for you. Long before CNN is talking about it, long before it's on Fox, long before it becomes a thing, you could already be in that thing. And then if that's the case, then you'll have money that's following you instead of you that's following the money. That's the big difference. I think that's the biggest difference, right? There are certain things that's like hot topics. You know what I mean? It's the story of the day, but that's generally an afterthought as it comes to the movement of money itself. It's the things that you can find on in your own research and your own intuition, your own looking into, that you say, okay, let me park some money here, and then if you land on the right stuff, then you can have money that's following you, big money that's following you, and that's not easy to do, but there are plenty. I mean, plenty of opportunities out there, especially in the spaces that you are already familiar with, especially in the places where you already work, especially in the spaces that you already have some semblance of understanding that goes beyond general knowledge. But it's about using that knowledge, using your knowledge and turning it into wisdom that can actually lead you to making better decisions when it comes to investing and your money. Anyway, I'm ERGJ, certified financial educator. I want to say thanks so much for tuning in today. For those that's in the BBC, we'll be back tomorrow for a BBC exclusive to talk about the will to win. I think that's what we're talking about tomorrow. Yeah, talk about tomorrow, the will to win. So look forward to reconnecting with you guys. Holiday season is typically like this. A lot of moving parts, a lot of stuff that's happening. I get real busy during holiday season. So bear with us. We went through this last year, but you can always reach out if you have any questions or concerns or anything like that. And make sure you shop with us too, guys. We do have a store, Black Bazaar. If you need some stuff for the holidays, need some soap, some toothpaste, stuff like that. I sell that stuff as well. That's my secondary business. You can check us out at ERGJ Black Bazaar, theblackbazaar.com. If you are looking for somebody asked me about a class, when I'm teaching class. I like to do lives. I don't necessarily want to do classes, but I do have classes that I've created, a couple. So you can check out the blackbillionairesclub.com, which is our other website, and just click on the store. You'll find resources there, books there, classes that you can take. And so again, if you reach out and you want to, kind of have one-on-one time with me, one of the first things I'm going to ask you is, have you taken a class? Because that's a great place for you not to have to wait to meet me or to speak to me directly in order for you to begin to get some knowledge and understanding on your own. Other than that, look forward to coming back and doing some more live broadcasts. We're going to have a part 2 to continue to go through our COVID-19. So look out for that. Make sure you hit the like, subscribe button as well. Until then, guys, I want you guys to remember this, that it takes a village. It starts with us. Let's build as we climb together. We all we got, beautiful people. Guess what? That's more than enough. Until next episode, you know what time it is. Mr. DJ, hit the music.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We will see you all there at the next episode of The New Black Wall Street. The New Black Wall Street.